Hi everyone, and welcome to our webinar, Everything Your Software Platform Needs to Know About Embedded Payments, presented by us here at BlueSnap. Now, before we get started, just a couple of logistics. First, we'll be recording today's webinar and we'll send out a link post-event. So if you have any questions for me, Tom, or Arby, please submit them in the question box to the right of your screen. We will do our best to get back to everyone's questions, but if we're not able to do so, we will follow up with you post-event. Now, let's get started with some panelist introductions. So I'm Nikita Hyatt, Managing Director for BlueSnap in Europe, based in London, England. And I'm really happy to be here today with my colleagues, Tom Lizio, Embedded Payments Expert. Hey, Tom.
Hey, Nikita.
And Arby Malikian, Solutions Consulting Director. Hey, Arby.
Hi, everyone.
How are you both doing today?
I'm good.
Great, thank you.
So I'm really excited because today we're going to be talking about embedded payments, or payments for platforms as we sometimes refer to it. We're now hearing everyone talking about embedded finance, which is when software platforms embed some of the traditional banking services right in their software. So an example is, say, Uber issuing credit cards for its drivers. Now, Credit Suisse forecasts that the total market for embedded finance will be approximately $800 billion, and $500 billion of that will be payments. So what that means is that this is a great opportunity for software platforms. As we can see here, only 13% of businesses are offered embedded payments through a platform they're using, but 75% of them, according to 451 Research, wish they could get payment capabilities from a software vendor they're already using for their business. So, for example, hairdressers use software to get their appointments. Now they want to use that same software for getting paid for those appointments. Restaurants used to use software to manage takeout orders. So you'd place an order online, get it delivered, and pay on delivery. And now that software is used to get paid for the takeout orders. So businesses want to reduce the number of vendors they work with. They want a more seamless experience for both their customers and themselves. And they want to use the software provider that they already trust and are using for other parts of their business. Now, for software platforms, embedding payments is an efficient way for them to meet their clients' needs, increase their revenue, and all of this contributes to the value of the platform. In fact, according to JP Morgan, platforms that embed payments see up to a 5 times increase in revenue per client. So embedded payments is big business, and it's only going to get bigger. So today I'm going to be talking with BlueSnap's embedded payment experts, Tom and Arby, about how software platforms can get started on their embedded payments journey. Tom, let's start with you. So when it comes to embedded payments, what options do software providers have if they want to embed payments in their platform?
Yeah, so software platforms have two options really for this. So option one would be to build your own payment solution in-house and actually become a registered payment facilitator. Or option two would be you'd work with a embedded payments partner, and with your partner you go to market as something what the industry calls a payback as a service, where you'd be leveraging your payment partner's expertise and technology. And a couple of variables that go into that would be, just the size of your business, the number of transactions that you'd be processing, your financial and technical resources, and then your risk tolerance as well. Arby, what are your thoughts on that?
Sure. Becoming a payment facilitator looks easy on the surface, but it's actually more complex than it appears. I've been in the payment industry for over 10 years now, and it seems like this has been part of the conversation for most of those years. Becoming a payfac is enticing, but the difficulties of doing so many times outweighs the benefits.
Okay, so you can't just wake up one morning and decide you want to become a payment facilitator. You need to have some sort of expertise. Is that what you're saying, Arby?
Yeah, exactly. When it comes to being a payfac, payment industry knowledge needs to be in-house. You need to already either have the people or hire for it, which can be quite costly. If you're going to do this on your own, you need experts in many fields, including software development, project management, compliance, security, merchant onboarding, support, and many more.
And Tom, how is that different when you're working with a partner?
So even if you're working with a partner, you still just can't wake up one day and decide that you want to be a payment facilitator. There's a lot that goes into it. However, it is quite a bit easier to do so because working with a third-party partner, they typically will have some pre-built solutions for you for compliance and for onboarding and for customer support as well. So it really just depends on the partnership structure that you ultimately choose because the majority of the embedded payments partners have options with minimal coding requirements, which will allow you to implement to the platform without any development help. But to that point though, we would recommend that you would use some sort of development resource when doing so, just to make sure that everything goes along, as successfully as possible, because there could be some issues, especially if you have some customizable options.
Okay, thanks, Tom. And so, Arby, one of the things you talked about is the amount of training required when you become a PayFac. Can you talk a little bit more about that? Like, what training is required?
Sure. Yeah, to become a registered PayFac, you definitely need a robust training program, both for your people internally and externally for your clients. Everyone who handles day-to-day operations, including customer service, onboarding, etc., will need to be trained on the platform and how to assist your clients. Additionally, employees who have access to sensitive information, like credit card and personal data, must be trained on compliance standards and their responsibilities for keeping customers' information secure. And ultimately, you will need to train your clients on using your payment solution. So you need to know your payment platform inside and out.
Okay, so this is what we do at BlueSnap, right? We have mandatory, all of us here on this call and the guys in the office, the guys and girls in the office, we have mandatory compliance training, product training, GDPR training, security, and so on. So we're very familiar with this here at BlueSnap. But what about when you work with a partner? If you use a partner instead of becoming a PayFac, is there still training required?
So this is where it's a little bit different working with a partner, because training is not that big of a deal depending on the program. So the lower cost options that are more the out of the box solutions, typically they don't require much training at all, if any. But the more advanced or white labeled programs probably would benefit from training, especially if one day they do plan on being their own payment facilitator. But one thing I always let people know is that you should always take advantage of training because knowledge is power. So if you have the option to get training, especially from your partner who does this day in and day out, I would do so.
Okay, so aside from training, how long does it take and how much does it cost for a software platform to become a PayFac?
Right. For any platform looking to become a PayFac, you need to be realistic about the budget and timelines. There aren't really any shortcuts when it comes to payments and payment data. Set yourself up for success by ensuring that you have a thorough understanding of your budget, which will be high, and what developing and maintaining your own solution will cost. Again, probably more than you think. As for timing, developing your own payment solution in-house can take a year or more, depending on your development and budgetary resources.
And Tom, what timings and costs can be expected if you work with a partner?
So this is quite a bit different as well if you do decide to work with a embedded payments partner. Partners typically offer different levels of partnership that can work with all sorts of budgets. And you may even be able to start up with that low cost option like I was mentioned earlier. And then you can actually advance and move on to a more developed product, or even a scenario where you're taking on a little bit more of the responsibilities as well. I will say that timing plays a massive role in this, and one of the biggest parts of the timing factor is just going to be, if you're going to work with a embedded payments partner, you can go to market a lot faster. Typically, you can go as quick as a day or two, or it can take you a few months. It really just depends on how much customized work that's going to be done and how white label that you want to be. So I'd say timing is a massive part of that, and also just being able to have a good go-to-market strategy as well.
Thanks, Tom. So onto the topic of monetization. How do platforms make money from their embedded payments?
So that's the $1 million question, Nikita. That's the one you probably get asked most often. Is talking about how much money can someone make doing this. So for an in-house platform, someone who's their own payment facilitator, there's going to be a setup fee required typically, and then they'll charge a small fee or a percentage of each transaction. But then the platform actually gets to keep 100% of the profits of that. So on paper, that sounds great, but it's really keep in mind and balance out the cost of doing all this work in-house, because it's all not free, and it's very expensive, and it can be really it can be a lengthy process as well, which is going to go into the cost of it as well. But if you're using an embedded payments partner, you'll see a couple of different fee structures that will go along with this. One being a revenue share model, where you will get a share of the payment partner's revenue on each transaction, or you'll see a buy rate, which is where you will include a small markup on top of the fees being charged by the embedded payments partner, and then you get to keep the additional revenue on top of that. So while on the surface the money you're taking in is less than if you are your own payment facilitator, but you don't have all the expenses that come along with doing everything in-house, and a lot less risk as well. So ultimately, the different payment structures will work differently for various companies and software providers, and it's just going to depend on what's going to be best for your business. So as you're looking at everything, just really dive into what is the product that you're getting and the overall solution that you guys are going to bring into the market, and then what are the costs that are going to go into that, and then to decide, is it worth going on your own to achieve a little bit more revenue, or should I go with a lower cost option and still get a good size or chunk of the money and go with a payments partner?
Thanks, Tom. So another kind of massive trend we're seeing these days is businesses going global, so selling outside their region, and this applies to all types of businesses, including software platforms, as we've seen with a number of platforms using BlueSnap. Arby, can you talk a little bit more about the kind of global trend that you're seeing?
Sure, I'd be happy to. Yeah, there are definitely global considerations, and they're very important. For example, to be a PayFac, you need to set up the appropriate banking relationships for all global processing regions in which you and your clients want to accept payments.
I guess this is why you see so few global PayFacs, right? Like BlueSnap, we're a global PayFac, and one of only, I think, 3 companies that can do what we do on a global scale like this. So for example, we've got our UK license and our EU license, US, Canada, et cetera, which is why we can do local acquiring in 47 regions. And I think, sort of speaking from the trends that we've seen here in the UK, is that UK only PayFacs have really struggled post-Brexit, because they now need to get their EU license and they have to go through that process all over again. Do you think this is a kind of a fair summary of why most PayFacs are only in one region?
Yeah, absolutely. It's very common to see that. It's much easier to keep track of and comply with rules and regulations in one region instead of many. This is why many PayFacs and even embedded payment partners and providers only process payments in one region. When you start expanding globally, you start running into different compliance and regulations considerations in each region. Things like PCI, AML, KYC, GDPR, taxes, etc. It starts getting very complicated as you continue to add regions. At a certain point, you really need to weigh if doing all of this yourself and becoming a PayFac will actually be worth it for your business.
So it sounds to me that speed to market is significantly quicker if you use a partner. Tom, does that sound right?
Yes. So when using an embedded payments partner and PayFac as a service partner, for your payment functionality, you are paying your partner to provide things like development of products, compliance, reporting, tools for KYC and underwriting, as well as for expediting the time to go live with payments, which can occur in little as a few days. Your payments partner actually holds all the banking relationships, and they've built this whole infrastructure that it would take years and millions of dollars for you to be able to do that on your own. So yeah, it's definitely a lot faster if you're working with a partner.
And Tom, how do you suggest software platforms and software providers figure out which model is right for them to become a PayFac or to work with a partner?
Yeah, so there's a little survey that I like to go through with a lot of the platforms that I speak with. One of which is finding out what is the motivation. So why are you looking to go down this path? Is it because you're looking to build something for client experience? Are you doing this to generate extra revenue? Or are you just trying to keep up with your competition? That's a big key, because if you're not able to answer that question, then it's gonna be tough for you to actually have a good product. Then the other things you need to look at are, what is your speed to market time frame? What is the size of your business? What's the number of transactions and volume that you'd be looking to process? Do you have the technical and financial resources? And then do you have anyone on staff that's a payments expert or has done this before? And then finally, how much risk are you willing to handle? Because those are things that are not really thought of often.
Now, RB, do you have anything to add on this?
Yeah, absolutely. Along with all those great topics that Tom just mentioned, I would also consider how you want to approach branding. Some partner solutions allow you to white label your embedded payments completely. While white labeling may require more development work than going with the partner's branding, it really demonstrates your ownership of the payment experience and maintains your brand with the customers. Also, it's still faster and less labor intensive than building the entire solution yourself and becoming a PayFac on your own. So you get a lot of those benefits without all the work necessarily. For example, two BlueSnap partners come to mind, and they are in the same vertical. Veracross is the leading provider of school information systems. When it comes to accepting payments within their platform, they wanted to white label and brand the entire payment solution. This way they maintained all branding and all interactions with their clients, while still using BlueSnap as their embedded payments platform in the background. Then there's Final Sight, who's also in the education vertical. Instead of white labeling the entire payment solution, they preferred to embed payments in their platform while referring their customers who wanted to process payments to the BlueSnap sales and onboarding team for us to handle that initial onboarding interaction. Either of these models works great, and it's truly up to each software provider to decide how they want to handle it. You really should think about onboarding and make sure you make those decisions properly. A frictionless onboarding process is critical. Onboarding includes underwriting and running initial background checks to meet KYC and AML requirements. Your clients want to be able to start accepting digital payments quickly after they decide to use your payment solution. So designing and executing an efficient, painless onboarding process is a must, no matter how you implement embedded payments. If you choose the right embedded payments partner, you can make onboarding quick and effortless for you and your clients.
So Tom, I thank you for that, RB. Tom, you're also an expert in the embedded payment space, and in your experiences, what have you been seeing in the market?
Yeah, that is a great question. Right now, I'm seeing a lot of just global growth. That has been a huge topic of conversations right now, are companies that are looking to have that global reach and get out of the US or go from Europe over to Australia. And oddly enough, right now, I'm speaking with a large US B2B platform that is looking to expand out of the US and into Australia, Europe, and into the UK. And they actually came to us because they were working with a US-based payments partner that kind of misled them a little bit about how they could support globally. And after months of conversations of trying to get this integration completed, it turned out that they didn't really have that global support that they thought they did. And so they came to us because for us it's one integration and you can go to 47 different countries locally. And so they have been enjoying our conversations, and we're working towards getting that global integration for them. And it really brings up a great point that it's like payments companies. Well, if you're a platform, you really need to be looking out for companies that say that they are global, because not every company that says they're global actually is global. So you need to really dig into what they're using, because technical debt can add up quickly. So if you're finding a solution that has multiple integrations to achieve different regions, that might not be the best partnership for you, especially if you're trying to keep your budget down. So really look at options that are scalable and that can grow with you and already have the support in place.
And Arby, do you have anything to add to that?
Yes, let's also not forget there's risk and compliance considerations. In fact, your company's risk appetite may be the most important consideration when it comes to deciding how to implement embedded payments into your platform. Developing your own platform has some very attractive benefits, but you can enjoy many of them through working with a partner for embedded payments or PayFac as a service without taking on all the risk. As we've already discussed, PayFacs are responsible for onboarding, underwriting, compliance, licensing. Additionally, storing and processing credit card data and personal information exposes businesses to substantial risk. Think about the liabilities with today's rising cases of cyber attacks and fraud. The benefits of working with a partner are hard to ignore when evaluating risk responsibility. Not only do data security responsibilities fall on your partner, but because they're a dedicated payment processor, they're more likely to have the expertise and resources to successfully prevent a breach rather than a software company in a totally different industry. Compliance and licensing includes responsibility for ensuring your merchants follow data protection best practices and removing their access to your platform if you suspect they're laundering money or otherwise breaking the law. Because many software companies are already accountable to some kind of data protection regulations, this may be something you're ready to take on, but you need to be sure it's worth it and that you're fully ready. At BlueSnap, we know how much effort goes into risk, compliance, and licensing because we have an entire floor of our building filled with compliance, risk, and underwriting teams. These folks eat, live, and breathe regulatory compliance and are arguably some of the most important people on our team. While the product and engineering folks build the amazing platform, the risk and compliance folks make sure it's sustainable by making sure it is all used properly and legally.
Yes, that is a very, very valid point, Arby. Now, if you're a software company moving to the world of payments, how do you compare and compete against businesses that only specialize in payments?
Yeah, first off, I would say you need to focus on just that, having a good payment solution, which in most cases would revolve around you understanding the needs of your current clients and then what your competition is doing. But one thing that I'm seeing over and over again, though, is that software companies forget that once you've entered into the world of embedded payments, with or without a partner, you're now competing against all payment providers. So two quick rules for you for people who are looking to explore embedded payments is one is to do your research. So for companies looking to be their own payment facilitator, you need to understand your market and really understand what people are going to be expecting from you, and then also you need to look at the payments industry, understand the trends and different products that are going to be retiring or sunsetting. You need to know how to sell payments and be able to overcome sales objections. Also try to figure out how you would support your clients. And what I've seen also is a big trend in people utilizing bots or troubleshooting articles, which those to me are really just band-aids, and that's really setting yourself up to fail and not really scalable. Then you really need to make sure that you're also staying ahead of the technology curve as well if you want to remain relevant within this industry. And then the second one would be to be totally committed. To be a good payment facilitator, you need to be prepared to be all in as a payment facilitator. And so you really need to make sure that you have the payment functionality ready and the technology and also the expertise as well to go head to head against companies that solely focus on doing just payments. But however, if you're working with a third-party embedded payments partner, you're able to leverage and integrate into their payment technology and take advantage of all those benefits that they already have in place. But that doesn't mean that every payments partner is going to be the right one for you. So you need to make sure you do your research as well and look for that all-in-one solution that's going to meet your needs, not only for your current client base, but the ones that are coming, years from now. And you want to find something as well that's going to have some tools such as, ability to optimize your payments for authorization and lowering cost. Look for a partner that's got local acquiring to help your payments accept cards and bank transfers in their local region. Look for a partner that also has multiple currencies and it can be paid out in multiple currencies for today, but also the future. And then also have something that has a fraud or chargeback management solution as well to make sure that you're protecting your revenue.
Thanks, Tom, for that level of detail. And one thing which you didn't talk about is reporting. So what about reporting on every level, like whether it's for your clients or yourself? I feel like this is also an important consideration. What do you guys think about that?
Yeah, absolutely, Nikita. Reporting, in essence, is communication, telling your customers about their transactions, their money, and everything related to their payments. For reporting, allowing your clients to track and analyze conversions, transactions, subscriptions, and of course payouts is the minimum level of reporting insight you will need. Even better is a custom reporting engine that can provide true insights into the success of your embedded payments, as well as help you uncover any potential issues with merchants. A high-quality embedded payments partner will provide a robust reporting engine with APIs and webhooks so that you can pull the data into existing dashboards you have for your clients. The right reporting approach will make reconciliation simpler for you and your clients. It will increase visibility into payments and finances, and ultimately, it'll help you and your clients understand the details of all transactions and payouts.
Thanks, Arby. Now, guys, what else should software platforms with embedded payments consider about their future when making these initial decisions? Like, what is your advice to software platforms about being sure that they're setting their business up for success?
Well, unfortunately, no one can truly be sure if their business is set up for success. However, there are some things that you can do to hedge yourself against potential mistakes and to make sure that you're setting yourself up to be successful. So one of which is to answer the questions that we were discussing earlier, such as being really transparent with yourself about the size of your business and the number of transactions and the volume that you'd be processing. But really, I mean, I really will go back to this point that I think understanding what your motivation is and what the why is behind your decision, because without that, you don't really have a foundation for your business model here. So I would really, drill into that really understand what is your motivation behind it. Then two would be to remember to build your product with the future in mind, which simply just means, building that you need to build your business with the ability to scale without having to rebuild your product to do so. So if you do decide to become a payment facilitator, you need to build your teams with the ability to scale, especially for onboarding and for client support. Creating a subpar onboarding and client support experience is also known as profit or growth killers, really. So really make sure that when you're building out the onboarding and client experience that you ask yourself the question, how can I scale with minimal loss? It's easier said than done, but this is where having payment experts on your staff and on your development team will really be critical in making sure that you guys are be able to set yourself up for success. Now, when you're working with a embedded payments partner, scaling up is typically just a matter of finding and signing new clients and customers. It's really that simple. Which the reason behind that is because that you are leveraging your partner's infrastructure and their support because it's there for you to take and use versus you having to build it all on your own. So for example, here at BlueSnap, we offer these future-proof technologies such as onboarding solutions, and we have payments experts at all levels that are here to help you. But Arby, I think there was one thing that I'm missing here. Can you help me out with that?
Sure, absolutely, Tom. It's important to think about global growth too. According to the recent Visa Global Merchant e-commerce study, 87% of global merchant executives see cross-border sales as their biggest growth potential. Even if you're not looking to sell globally, there's a good chance your clients are. There's a lot you need to get right when it comes to global payments, and many pure payment processors don't get it all right. Improperly executed global payments can lead to many issues. For example, low authorization rates, high and unnecessary fees, checkout abandonment, unnecessary technical and operational debt, plus many other unforeseen issues. All of this will affect revenue for you and your clients. Often, even if you are a registered PayFac, it may make more sense to work with an embedded payments partner for the global payments piece. Look for a single solution that has local card acquiring capabilities in multiple regions to increase auth rates and reduce costs. One that has payment routing capabilities to further improve auth rates, and one that offers local currencies and payment types to increase customer satisfaction and reduce checkout abandonment.
Guys, wow, thank you so much. This is really a lot of information for software platforms to think about. Like in summary, I'm hearing that there can be a lot of great rewards from being a payment facilitator, that you own your own payments, but you need to consider the costs, the risks, the time to market that comes with doing it yourself. On the other hand, when you work with an embedded payments partner, you get most of the same benefits. You can still own your own payments experience, but you also benefit from your partner's expertise, the staged risk, and a much quicker time to market. Is that a good summary? Am I missing anything?
I think that pretty much sums it up. For businesses that want to develop a more customized payment facilitator solution without spending a year or more working on developing their own in-house solution, then working with an embedded payments partner is probably going to be the right choice for you, because it offers a lot of different options and pre-built functionality for you to get started quickly. And really, for example, here at BlueSnap, we actually offer 3 different partner programs for embedded payments and for payback as a service. And so wherever you're at on your payments journey, we probably got a solution for you. And so one of them is our BlueSnap Dash product, which is our turnkey hosted solution of embedded payments that gives you a fast speed to market. It's actually our fastest one. It's that lower cost option because there's not as much development work required. And then we also have our BlueSnap Relay product, which is another quick solution to market as well. But it's part of our payback as a service program, where it's a completely white labeled product offering. So it's going to be something that will be yours to kind of go to market with, but it also shields you from the risk that BlueSnap will be taking on for you, but allows you to kind of control your brand. And then we have our BlueSnap Flex program, which is our branded payback as a service solution, where you actually will leverage our API, but you also get complete control. So you are essentially, going to market as your own payment facilitator, just utilizing our tech stack. So the right embedded payments partner will really be there to help you get started quickly, and they'll be there to support your growth as well.
Thank you, and thanks both of you for your insights. Now, I think we've got time for a couple of questions from the audience. I can see quite a few, but let's see how many we get through. So there's a question for Tom. Which industries are you seeing to have the most growth in embedded payments?
Okay, most growth. I would say for sure education, as already mentioned in a couple of his answers, that where we have a couple of education partners that he highlighted there, and we continue to get more and more platforms that are looking to move into the embedded payments. I would definitely say B2B and invoicing solutions, retail, manufacturing, and logistics. I'd say those are probably the top ones that I'm seeing the most of.
Thanks, Tom. And then I've got a question here for you, RB. If we go down the partnering route, how does BlueSnap simplify the work for onboarding and for transacting?
Sure. For both, we provide the necessary tech stack, the APIs. For onboarding, we'll provide the APIs, plus the risk, compliance, and underwriting resources, which is also key. For transacting, same. We provide the platform and the APIs. Plus, we have a full development and technical team who maintains and updates the platform. So therefore, you don't have to manage this.
Thanks, Harvey. And I think we are just about at time. So I'm going to wrap things up. If we didn't get to your question during the webinar, we will follow up soon. A huge thank you to RB and Tom for sharing so much great info with us today. Thank you, guys. And if anyone wants to learn more about embedded payments, please visit bluesnap.com, where we have a ton of information and guides to help you along your journey. Thanks very much for your time. Bye, guys.
Thank you.
Thank you, everybody.